Welcome back. Well, the market's holding in the green, but we have come off from the high point of the day. So we're up close to around 20 points. At the start of the day, we were up close to around 65 to around 70 points out. But let's get chatting with our next management. TTK Prestige, that's the stock on our radar post their earnings. Well, the company posted flattish revenues, gross margins, well, they held steady. But we want to understand what's demand on ground and how are things shaping up from here on. Well, we're joined by Mr. Jagannathan, the chairman of the company. Hi, Mr. Jagannathan. Always good hearing your thoughts, sir. Let's focus on a couple of segments. Online sales, I'm looking at some of your competition. They have been giving a decent amount of discounts. What about you? I think online sales is only around 12% of your business. And also give us a sense about export market. That's 5-6% odd. But when you joined us the last time around, you said you don't have enough capacity to cater to them. So, a comment on both these 2 points. Go ahead.
Can you repeat the question, please?
The first part, sir, on the online sales. The second part on the export markets. The capacities weren't, the capacity that you have, or you weren't able to fulfill the kind of export orders that you were getting. That was the sense we got last time.
Online sales is flattish. Nothing great. We don't allow big discounts on online because it disturbs the offline market. So we are careful, and it is flattish. As far as exports are concerned, you're right. We simply do not have the capacity to take on the orders that are flowing in. But we are correcting that situation over the period next 1 year. We will build the capacity.
Okay. Sir, in Q2, all your segments X of cookers saw a decline. Has that reversed? Can you tell us how each of your segments are doing in the current quarter?
Actually, that is a misstatement. Last year, Q2 was post-COVID.
Okay.
And we grew 55% over previous year. So comparing to Q2 with last year is wrong. You compare first half with last year and we've grown 21%.
Okay.
All right, Mr. Jagannathan, the last time we spoke, good morning, Prashant here, you had said that, the first 15, 20 days in October were hit because of flooding in the northern, specific northern part. But you said things will hopefully pick up. But that was also, I think, the festive period, very important for sales, etc. Has that been made up now that we are wrapping up November?
It's become normal again.
Okay.
We are getting sales.
Okay. Will that? I mean, okay, you'd be able to make up for lost sales.
That is very difficult to do always. But we're confident. We're growing. We're 21% ahead of last year. We believe we will end the year in double-digit growth. And that, considering the year, we should be happy.
Okay, double-digit growth for the year and margins in the vicinity of around 16%, right?
Which is correct.
Okay. You're sitting on a good amount of cash, sir. And,
yes,
periodically, whenever you join us, we ask you whether you're on the prowl. You hint at, yes, you could be on the prowl. But do you think in this fiscal, will you pick up a couple of assets or one asset that you're zeroing down on?
We are very, very careful as to what we want, and it is difficult. We're still on the prowl.
Okay. Always still on the prowl. So has there been a pickup in the entry-level segment?
No, that's still very tight.
That's still very tight.
But last you were on, you said that it's not doing badly. I remember I asked you, we had another representative from a company who actually had said that entry-level is doing is stagnant. You kind of pushed back and said, well, it's not doing too badly. Could you give a little more color how that is? Because that is a large proportion of your sales.
Not anymore. Now, a very large proportion of our sales is at the top end. Probably because the entry level has been flat.
Okay. So would you look to increase your ad spend, perhaps to try and invigorate this lower end of the market?
We have a policy that we spend 6.5% of sales on advertising.
Okay.
Where we target it, we change every year, but we don't change that number.
All right. And could you give us some color on the industry per se? Has the shift from unorganized to organized continued? What is the industry growing at? You said in the first half of the year, growth was a little more than 20%. What would the industry growth be at?
I don't have the current data on that because the data comes normally about 8 months later. But I believe that the unorganized players are still finding it tough to enter.
Okay.
Mr. Jagannathan, last you were on, you said that you were revamping the UK business. Of course, I mean, things have been bad there. Could you give us an update? What's happening?
Things have got from bad to worse. Last year it was merely bad. This year it is terrible.
Oh, God. And you'd said that you were basically sort of moving away from selling to retailers, trying to get to consumers directly. How are you sort of
All
restructuring
that
your
has been
business?
done.
Yeah.
We now have 30% of our UK business going direct to consumer.
Okay.
But the market is really, I mean, UK economy has collapsed.
And there are no signs of recovery there. So are you cutting back on your inventory?
In the UK, yes.
In the UK, you are. What else are you trying to do, sir, to stem the losses or the weakness in the UK market as a strategy?
Well, like Prashant was saying, we go direct to consumer now.
Okay.
So that has improved a little bit, but it's difficult. UK market is very, very bad. It's difficult to really stimulate ourselves in that market.
So UK revenues versus pre-COVID, sir, how much would it be lower? Just to get a sense of how bad things are?
About 30%.
30%. Okay. And you also, just one final question. You had plans to launch 32 new SKUs in the current quarter. Is that on track? And are these all premium products?
We've already launched it. It is on track. We've already launched it, and they are all premium products.
Okay.
All right. Mr. Jagannathan, it's always a pleasure, sir. Thank you very much. Appreciate you joining in. And thanks once again for those insights. Appreciate it. Well, that's